Last week, Ethereum investment products saw nearly $300 million in net inflows. That's the strongest streak since the US elections in 2020. It marks Ethereum's 7th straight week of inflows and pushes the total to over $1.5 billion. Bitcoin, meanwhile, isn't having the same luck. Bitcoin products have now posted 2 consecutive weeks of outflows, losing over $56 million. Even short Bitcoin funds saw withdrawals, which suggests that investors aren't betting on either direction right now. Ethereum, on the other hand, is pulling in attention and capital, and not just from retail. SharpLink, a NASDAQ-listed firm, recently raised $425 million to build an Ethereum treasury. And here's the kicker. Ethereum co-founder Joseph Lubin has officially joined their board. And it's not just investors who are bullish. The Ethereum Foundation itself is ramping up. They've restructured their research and development division to prioritize scaling solutions, improvements to Layer 2 networks, and better user experience across the board. Their treasury, which holds over $970 million, is being deployed more actively than before. They're becoming more transparent and more involved in decentralized finance, including staking and lending protocols. Institutional analysts are starting to take note. A recent report from Bernstein calls Ethereum a backbone for future financial infrastructure. While Bitcoin is still seen as digital gold, Ethereum is becoming the tech layer for stablecoins, tokenization, and on-chain finance. And that distinction is becoming more important by the day. Visa, MasterCard, and Stripe are already building stablecoin payment systems on Ethereum. Every transaction that flows through Ethereum's rails adds to its network value, and that's not just theory anymore. This shift is changing how crypto is perceived altogether. It's no longer just about speculation. Major players like Coinbase and Robinhood are building financial apps on Ethereum. Kraken is reportedly preparing to offer tokenized US stocks for international users, and yes, those will also be powered by Ethereum. All of this reinforces one key point. Ethereum is not just a cryptocurrency anymore. It's becoming core infrastructure for the next generation of finance. So what's next for Ethereum? CoinCodex's algorithm is forecasting a sharp move up, predicting Ethereum could hit $5,300 in 2025. That's an 86% jump from current levels. It won't be a straight line though. After the peak, the model expects a pullback and a consolidation phase around $3,000, potentially laying the groundwork for the next major market cycle. So to wrap it up, with nearly $300 million in inflows, a $1 billion treasury upgrade, and institutional buy-in from names like SharpLink and Bernstein, Ethereum isn't just holding strong. It's leading the charge into a more mature infrastructure-focused era for crypto.